We've got Palantir Q3 earnings. We've got a $16 billion valuation. We've got a technical chart pattern sitting right on the edge or a cliff of support. We'll talk about that on more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Palantir Technology. I remember doing videos on this stock when this thing was like a 50, 60, $70 billion company. And I was like, this doesn't make any sense. And my comments would fill up like, no, you're not seeing the big picture, this type of thing. And I've done a couple of videos more recently on this stock where it's like, okay, it's still overvalued. And when we walk through these Q3 numbers, obviously, first of all, the company's not profitable. Even when you factor in stock-based compensation, it's still not a profitable enough company to warrant a $16 billion valuation. But you got a strong balance sheet over here, and you do have some cash flows, and you obviously have still a relatively strong growth rate going forward, although Wall Street's anticipating that it kind of reaccelerates into next year. And certainly that's the great question mark with Palantir and a lot of stocks that we're looking at. But more recently, okay, things have started to look a little bit better. Obviously, when you go from like a $70 billion valuation down to 16 and you continue to grow, well, things do look okay. Now, year to date, stock's down 60%, but we just got those Q3 earnings at Palantir, revenue coming in at $477.8 million. That was still 22% growth year over year. It beat expectations by about $3 million. We won't look at this non-GAAP EPS number right here on the headline. We'll come over here and we'll look at it from a financial perspective. But obviously, the upcoming quarter and the upcoming year even for Palantir is what investors are buying into. The upcoming quarter, the fourth quarter. So we just reported Q3. The upcoming fourth quarter, we got guidance from the company today coming in at about $503 million to about $505 million. Wall Street was actually expecting a number closer to 506. The high-end estimate at Wall Street was for 508. The low end was at 501. So Palantir arriving kind of in the middle there, but for a stock with still a premium valuation, because you notice here for the full year of 2022, they're expecting a shade over $1.9 billion. We'll give them credit for like $2 billion to make the math really easy. Well, you still got like an 8 times sales on this one. So if you're at 8 times sales, you kind of want the company to at least meet guidance, if not kind of accelerate over and above it. And on top of that, you're at 8 times sales and you're not profitable from a GAAP perspective, and you're essentially kind of break even from a non-GAAP perspective on those earnings. I think Wall Street's expecting more. Now, speaking of Wall Street expecting more, look at the forward revenue estimates, just going to be 17% in that fourth quarter, but then somehow going to back and reaccelerate into a mid-teens grower by the back half of next year and then sustain that into 2024. That is some Tom Nash-like bullish projections on this company. And if it cannot meet those expectations, well, it'll probably fall off this cliff of support. Now, Citi chimed in today saying that Palantir will probably have further downside due to slower growth. So I don't think Citi buys into this growth rate and slower government spending. We obviously got those elections. I believe they're tomorrow here in the United States. More than likely, look, I'm not in the business of projecting elections, and the people who have done it over the last couple of election cycles have done a poor job of it. But if we do end up with a split government, where does that leave government spending for military spending, for government contracts, and those types of things? My guess is some of those things will just continue to carry on, as all politicians from both sides like to spend money. But Citi is chiming in and saying that there's potential government inflection into next year as those federal spending issues start to crop up. And obviously you have higher interest rates. So every dollar that the government kind of spends in deficit spending is obviously costing more and more. It hasn't slowed them down in the past, but maybe this election cycle will finally see some fiscal responsibility. I wouldn't hold my breath. Now, back to Palantir. Revenue at that $477.9 million. Last year, you're at $392. What Wall Street loves about this company, it checks 2 boxes, okay? It has relatively high growth rate. Okay, the growth rate at kind of the mid-20s, certainly not what it was when this stock was 50, 60, $70 billion. But look, not all companies can just grow at that rate. no company can grow at that rate forever. Still solid growth rate. Even better than that are these cost of revenues are very, very small. So off of $477 million worth of revenue, you have just $107 million in costs. And so you're ending up with a gross profit of $370. But here's where Wall Street is kind of caught up with this company. And here's where the bull case arguments of this company a year ago, 2 years ago, when the stock was 60, 70, 100, 200% higher, they just didn't understand that these operating expenses were not scaling with the business. Your sales and marketing up year over year, R&D basically flat though year over year. And what the company, let's give the company credit, their general administrative expense, which actually exceeds their research and development expense, that actually ticked down. So basically flat year over year. So we're starting to see a little bit of normalization in the company's expense line. And so you see over the last year, you went from $397 on total operating expenses up to about $432 million. So that shrunk your loss from operations year over year down from, we'll call that 92 million down to about $62 million. But you're still seeing, okay, yeah, this company is projected to grow in subsequent quarters, but we're not likely to see like actual operating profits at this company really anytime soon. On top of that, a lot of these operating expenses are stock-based compensation. As you see down here, 140 million in the most recent quarter, 184 last year. That is leading to more and more shares outstanding. When you have more and more shares outstanding on a stock that is in a well-defined downtrend, well, obviously that contributes to more selling and more supply of shares that are already tanking. Now, probably the beauty of Palantir is their balance sheet. They've got a strong cash position. Looks like to me, since the beginning of the year as well, you've got accounts receivable ticking up as well. That's showing you that you have maybe, you've earned some revenue or you're going to achieve and earn this revenue. Got a nice book of business that they're working on. Those government contracts, obviously, the sales cycle's a little long and the payback on those is also a little long. From a liability perspective, almost nothing here, okay? Just $932 million worth of liabilities, more than canceled that out. On the cash side, you've got $3.3 billion worth of total assets and just $932 million worth of liabilities. So you can factor that in if you really want to do a deep dive on this valuation. Well, you can factor in $16 billion valuation, but almost no liabilities. And so it gives the company a tremendous runway into the future and certainly could operate basically how it is, basically with no profits from an operating perspective. They can do that for a considerable amount of time. Now, in these no profit companies, from an operating perspective, from a GAAP operating perspective, you want to flow down to cash flows and see how the cash is moving through the business. So you have a net loss over the last 9 months of $404 million. It actually has accelerated over last year where you just lost $364 million. You have stock-based compensation that you get to add back in dollar for dollar. That is down year over year from 611 down to $435 million. But just understand, when the stock is down over the last year 72%, well, this stock-based line, while from a dollar perspective is less, from an actual number of shares is actually probably a lot more. So there's actually more dilution despite the lower dollar amount. They do have some unrealized, looks like losses from these marketable securities maybe, and that's an add back of 260. And so you come down here to net cash provided by the operating activities actually down. And so this is kind of discouraging. You went from $240 million worth of positive cash flow last year operating side down to about 145. They invested in property, plant, and equipment to the tune of $35 million in the most recent quarter. Last year, it was just 6.8. They got about $72 million in proceeds from these common stock options. So over the last year, you've increased your cash position by about $85 million. So from a balance sheet perspective and a cash flow perspective, the company is doing just fine. This company can operate like this for quite a while. Now, is it going to be beneficial for you, the shareholder? No, obviously these results, Wall Street hates them. And the stock has just kind of gone sideways, stair step down, and then gone sideways, and we're doing that again. And so if this pattern continues, you'd actually expect really actually another leg down on this one. believe it or not. Since you can't value this one from a price to earnings basis, still we're looking at, again, for the full year, the company is expecting, we'll give them credit for $2 million, even though it's $100 million under that. What you're still looking at like 6, 7, 8 times sales. I'm seeing over here, you've got about a $14.4 billion market cap. The thing with Seeking Alpha is the stock is down 6.5%. So these market caps usually don't update. Probably should be better at acknowledging that here on the video, but you've got about a $14 billion market cap on this one. You're still 7 times sales on that one. It's not obviously as wildly overvalued as it was, but that's a pretty flimsy argument. I tell you what, if you're not like Citi and you think that there's not further downside and there's not going to be slowing growth, if you believe in Wall Street that you accelerate back to kind of a mid-20s growth rate, well, here's your level of support. The 52-week low is at 644. Here we are sitting at 698. I'm just not convinced this level holds. And on top of that, you obviously have clear resistance. I have this purple line in here. Notice that the stock has had trouble getting over just $9. And I understand a move from 7 back up to 9, even a little higher up to 10 is a huge move in the shorter term, but I don't think a lot of you are looking at this from kind of a trade perspective. This one just has the feel that it wants one more leg lower, and that final leg lower actually would be the spot where, from a speculative investment, certainly would start to line up. From a valuation perspective, from a forward guidance and a revenue growth perspective, if you could get this one south of, I would say, like a $10 billion valuation, where you're only paying like minus cash on the company, like 2 to 3 to 4 times sales on this one, I actually think that would be an excellent buying opportunity. So you almost need this one to get down to like maybe $4 or $5 per share before it really gets interesting. You certainly could take a shot at today's price, but I would put a stop loss at around the 52-week low. And with all of these stocks, we're covering a lot of these kind of speculative names that had a lot of interest drained out of them. I would take profits, maybe not on your whole position, but if you were to buy, say, 100 shares of a stock like this, and it would go up 10, 15, 20, 30%, which is certainly plausible, and it certainly has done that just over the past couple of months, well, I would absolutely take some profits on that, considering the track record of this company for shareholders has been abysmal. Hopefully, guys, enjoyed today's video. Be back again. There's so many earnings this week. You'll see me again soon. Good luck with your investments.